All right, perfect. So I think we are recording. So this is the part 2 of gold um, tracking. So we're tracking every single bit of move of gold so far. What we had was a push up to 1829 for them to collapse down to 1789. As you can see, that's exactly what happened um, on this chart. So the first option we had, the previous one we looked at was we were at this consolidation stage right here. So what we looked at is a potential break below and then continue the momentum to the downside to 1789, 1790 around that level, or potential retracement down to 61.8 up to 61.8 and then finish back down below these sorts of consolidations and then continue the momentum down and ride the momentum down to 1790. And the last idea I had on that trade, which was actually the one that panned out, was 1829. So price reaches back down to 1829, grabs liquidity from these highs over here. The London highs on the 3rd of January before collapsing back down to 1790, 1789. So far, so good. That did happen with relative ease for gold. Stall around these sorts of levels as there was a bit of traffic around these levels, but nonetheless, it did collapse all the way down. So right now, what is price doing? So right now, we're going to stay on the hour time frame. Currently, price is consolidating and it's stalling a little bit on this level. So consolidation. What we're looking at is here. Potentially go down to even 30-minute time frame. There we go. Cool. So just went down to 30-minute time frame just for accuracy. So far, price is consolidating. So right now, buyers and sellers are fighting. Bulls and bears are fighting whether to either push it all the way up or push it further down. So another sort of area we can look at is 1785. Coordinates 1785 exactly. For these sorts of levels right here on these lows, I think they were New York session lows around these levels. So let's mark that down. So New York lows right there, as we've taken these lows on the London session as well. So what we can see potentially here is a break of this consolidation down to 1785. Mark that level down as well. 1785. There we go, to 1785 and that level, and then a potential push to the upside, which I'm gonna assume will probably reach around these sorts of levels, back up to 1812, and I'll mark that on there. So 1812 is potentially where we're going to reach first. It might even stall around these sorts of levels. So it might stall around 1800 level. So let's put that on here. 1800 level, it might stall there before continuing, and then might consolidate a little bit before continuing back up to 1812. So what we can assume going here is a further push down to 1785, and then a continuation up to 1812 is what we're going to be looking at. Yeah, cool. So yeah, but I'm also looking at higher time frame kind of analysis. For a higher time frame is would potentially see a break of this consolidation level, reaching these this wick level right here, on the 31st of May around 1856, 1855, around that sorts of level in the long term. That is so, but this is an intraday kind of perspective here for gold. So yeah, let's see what will happen here on gold. I'll definitely be looking to get in a position at 1785 all the way up to 1812. Um, shouldn't be too much of an issue getting there. So yeah, so that's my prediction for gold for the coming week ahead.